Okay, so are you ready to dive deep?
Let's do it.
All right, so today we're diving deep into consumer spending and market trends.
Ooh, that's a good one.
It is a good one.
Yeah.
And, we're really trying to unpack how people are spending their money these days.
Right.
How the market is reacting to all of that, and what it all means for your investment strategies.
Yeah. And especially for companies of different sizes.
Especially for companies of different sizes, yeah.
Right.
So our guide today...
Buckle up.
Buckle up. Yeah, our guy is Shelby McFadden.
I love her.
Oh, she's great.
Yeah.
She's a sharp investment analyst at Motley Fool Asset Management.
Mm-hmm.
We're pulling from a recent interview that she did on Global Money Talk.
Cool.
And let me tell you,
yeah,
there are some seriously interesting takeaways here.
big time.
So what's fascinating?
What's fascinating is how consumer behavior is bumping up against big economic forces like inflation and interest rates.
Mm-hmm.
And these aren't just abstract concepts.
Right.
They have a real impact on investment decisions.
That's right. And the economic data we've been seeing lately
Yeah.
is a little bit of a mixed bag.
A little bit, yeah.
On the one hand, we have the Consumer Price Index, or CPI,
Mm-hmm.
seem to be cooling down.
Okay.
But then the Producer Price Index,
CPI.
CPI, decided to heat things up.
Right.
So how do we make sense of these conflicting signals?
Well, that's where the idea of true inflation comes in.
True inflation.
Which McFadden highlighted in her interview.
Okay.
You see, the CPI measures changes in the price of consumer goods and services.
Yeah, makes sense.
Which is important.
Mm-hmm.
But true inflation considers a broader range of factors,
Okay.
including things like housing costs, healthcare expenses, and even the availability of certain goods.
Oh, wow. Okay.
So it tries to capture how people are actually feeling the pinch,
Okay.
which sometimes goes beyond just the raw numbers.
So even if the official CPI says inflation is slowing down,
Right.
people might still be feeling squeezed in their daily lives.
Exactly. And McFadden used the phrase, hanging in there,
Hanging in there.
to describe the current state of the consumer.
Oh, wow. So what do you think is behind that sentiment?
Well,
Is it purely economic, or are there other factors at play?
it's likely a combination of things. Obviously, economic uncertainty plays a role.
Sure.
When prices keep rising and people aren't sure what's coming next, it can create a sense of anxiety.
Right.
But it's also about psychology.
Hmm.
The media constantly bombards us with news about inflation and potential recessions,
Right.
which can make things feel worse than they actually are.
Yeah.
It's a bit of a self-fulfilling prophecy.
It's like this constant low-level stress hum
Exactly.
in the background.
Mm-hmm.
So with all this uncertainty,
Yeah.
what are some key indicators that investors like McFadden are watching to get a sense of where things are headed?
She specifically mentioned the 10-year Treasury yield,
Okay.
often called the long bond.
Long bond.
It's a benchmark that basically reflects how the bond market feels about future inflation and economic growth. If the yield goes up, it can mean investors are expecting higher inflation down the line,
Oh, okay.
which can make things a bit volatile.
Okay, so how does the bond market's reaction to inflation
Yeah,
actually influence my investment decisions?
good question.
Especially I'm focused on picking individual stocks based on their performance.
Right. Even if you're a bottom-up investor who focuses on a company's individual merits,
Yeah.
the broader market environment, including those bond yields, can have a ripple effect.
Right.
Think of it like this: higher bond yields sometimes make stocks seem less attractive
Okay.
because bonds suddenly offer a more predictable return with less risk.
Okay.
It's all about relative value.
Gotcha. So even if I'm not investing in bonds directly,
Right.
I should still pay attention to what's happening in that market
Absolutely.
because it gives me clues about the bigger economic picture.
Exactly.
Interesting.
Mm-hmm.
Now we can't forget about the holiday shopping season,
Oh, no!
which is coming up soon.
Right around the corner.
This year, it's a shorter shopping season because Thanksgiving falls later in November.
Right.
So does that shorter time frame impact retailers and their stock performance?
Absolutely. It adds another layer of complexity for retailers.
Okay.
Because remember, they make most of their holiday season ordering decisions
Yeah.
way back at the beginning of the year.
Right.
They're basically working with a crystal ball.
Yeah.
And if consumer demand suddenly shifts,
Right.
they have limited ability to adjust on the fly.
That's true. I remember last year I was kind of disappointed with the Cyber Week discounts.
Really?
I was expecting deeper cuts.
Yeah.
But it seemed like retailers were playing it safe.
Huh. Interesting.
Do you think that the whole Black Friday and Cyber Monday hype is starting to fade
Ooh,
as retailers offer deals throughout the year?
It's a great question, and it seems you're not alone in noticing that trend. Maybe those mega sale events are losing their impact
Mm-hmm.
as consumers become more savvy and spread out their shopping.
Yeah.
But if that's the case, what does it mean for retailers?
Yeah,
Do they need to rethink their entire strategy?
right.
And as a consumer, how does this affect your shopping habits? Are you more likely to wait for a deal or just buy what you need when you need it?
Lots to ponder there.
I know, right?
So considering the shorter shopping season, mixed economic data, and evolving consumer behavior, which consumer stocks are catching the eye of experts like McFadden.
Well, despite their already high valuations,
Uh-oh.
she's still bullish on Costco and Walmart.
Really?
Yeah,
Even with their prices going up?
even with their prices going up.
What's her rationale there?
It all comes down to operational efficiency and pricing power.
Okay,
McFadden believes both companies have mastered the art of cost management.
okay.
She also said, and I quote, Costco, they get the best cost on everything.
I've noticed that, but how do they manage to keep prices so low, especially when inflation is hitting everyone else?
That's the million-dollar question, isn't it?
It is.
But whatever their strategy, it seems to be working, especially in a time when consumers are feeling financially squeezed and looking for value.
Right.
Another company that's holding up surprisingly well, according to McFadden, is Procter Gamble.
Procter Gamble,
Yeah.
I wouldn't necessarily think of them as a must-have in a tough economy.
Yeah, I know, right?
What's driving their success?
Well, you might be surprised they've been incredibly successful at maintaining their pricing power. And, even more importantly, brand loyalty.
Okay.
McFadden even highlighted the unique quality of their Tide detergent.
Really?
It seems people are willing to pay a premium for it, even if they're cutting back in other areas.
I guess everyone needs clean laundry,
Yeah,
no matter what the economy is doing.
true.
But it makes you wonder, what is it about Tide that makes people so loyal?
That's a great question. It's likely a combination of factors.
Okay.
Procter & Gamble has done a fantastic job of building a strong brand and associating Tide with quality and reliability.
Yeah.
But there's also the power of habit. Once people find a product they like and trust,
Right.
they tend to stick with it.
Yeah, they do. So we've talked a lot about consumer goods and the companies that sell them.
Right.
But what about other sectors?
Yeah.
What's the outlook for industrials, for instance?
So McFadden has a more neutral stance on industrials right now. Initially, this sector got a boost from increased infrastructure spending,
Okay.
but there's growing uncertainty about the future.
Uncertainty about government spending.
Yeah.
But didn't both political parties support the infrastructure bill?
Yes.
I mean, that seemed like a pretty solid bet.
You're right. There was bipartisan support for that bill, which could provide some stability to the sector.
Okay.
But with a new administration in place,
Right.
there's always a chance that priorities could shift and funding could be redirected.
That's a fair point. I mean, nothing is ever set in stone, especially in politics.
Right. Exactly.
So are there any specific companies within the industrials sector
Yeah.
that McFadden sees as particularly well-positioned,
Yeah.
regardless of these potential shifts?
She mentioned Jacobs Engineering as an example.
Jacobs Engineering.
They're involved in a wide range of projects,
Okay.
from traditional construction to data center development,
Wow, okay.
which puts them in a good spot to benefit from multiple trends.
Yeah, data centers are definitely in high demand.
Oh, yeah, for sure.
With all the growth in cloud computing and data storage.
Absolutely.
That makes sense. But stepping back a bit,
Yeah.
this conversation about specific companies and sectors makes me wonder about the bigger picture of investment strategies.
Right.
There's been a lot of talk about active versus passive investing, especially with the rise of index funds and ETFs.
For sure.
Where does McFadden stand on that debate?
Well, she's actually a big believer in active management,
Really?
especially in a market that's so heavily influenced by passive index funds.
Okay.
Her view is that skilled active managers can identify opportunities that might be missed by simply following the index.
So it's about being more selective and nimble rather than just riding the wave of the overall market.
Exactly.
Okay, I can see the appeal of that, especially in a volatile environment. But isn't active management usually more expensive
Yeah,
due to higher fees?
it can be.
Is it really worth it for the average investor?
That's a key question, and the answer depends on several factors,
Okay.
including your time horizon and your risk tolerance. Active management might be more suitable for those with a longer time horizon
Okay.
and a higher risk appetite.
Okay.
They're looking for those outsized returns
Right.
and are willing to ride out some bumps along the way.
Okay.
Passive investing, on the other hand, can be a good option for those seeking a more hands-off approach with lower fees.
Yeah.
It's about finding the right fit for your individual circumstances and goals.
So there's a one-size-fits-all answer.
Exactly.
It's about understanding the trade-offs
Right.
and making informed choices.
For sure.
That's helpful. Now, we've talked about large companies like Costco and Walmart.
Right.
We've touched on industrials.
Yeah.
What about smaller companies? Does McFadden have any thoughts on small cap
You
stocks?
want some?
She loves them.
She does. She sees a lot of opportunity in small cap companies, especially for investors who are willing to be patient and ride out some volatility.
Okay, so it's a classic high-risk, high-reward scenario.
Exactly.
But what makes small caps so appealing to someone like McFadden?
Well, for one thing, you get to witness growth firsthand.
Okay.
You're not just buying into an established giant.
Right.
You're investing in a company that's still evolving and potentially disrupting its industry.
Right.
There's a certain excitement in that.
For sure.
Plus, because small caps tend to be less followed by analysts and institutional investors, there's a greater chance of uncovering hidden gems that the market might be overlooking.
So you're not just following the crowd. You're doing your own digging.
You're doing your own research.
And potentially finding those diamonds in the rough.
That's it.
That makes sense. It's like being an explorer.
Yeah.
Venturing into uncharted territory.
Exactly.
But with that exploration comes risk, right?
Absolutely. Small caps are often more sensitive to changes in interest rates and economic conditions.
Okay.
They might not have the same track record of success as more established players, so there's definitely more volatility involved.
Right. And remember, not every small company becomes a giant success story.
That's true.
Some might fizzle out while others get acquired by larger companies.
Right.
Did McFadden mention any examples of small cap success stories?
She did.
Something to illustrate that potential?
She highlighted Shockwave Medical.
Shockwave Medical.
A medical technology company that was ultimately acquired by a larger company. This wasn't just about a big payday for early investors.
Right.
It was a testament to the company's innovative technology and its potential to disrupt the healthcare industry.
That's a great example. It shows that investing in small caps isn't just about gambling on a long shot.
Exactly.
It's about identifying companies with real potential and being part of their growth journey.
Being part of the story.
Yeah, but with all this talk about different company sectors and investment strategies,
Yeah.
it's easy to get lost in the details.
It is.
What's the overarching theme here?
Yeah.
The key takeaway that listeners should keep in mind.
I think the main takeaway is that we're navigating a period of transition and uncertainty.
Okay.
The economy is sending mixed signals, consumer behavior is evolving.
Right.
And the market is trying to figure out what's next in terms of inflation, interest rates, and growth prospects.
Okay.
It's a dynamic situation.
Right.
And there's no easy playbook.
So how should we be thinking about the future, say, looking ahead a couple of years?
Yeah.
Does McFadden have any predictions for what the market might look like in 2025?
She does. And this is where things get really interesting.
Okay, I'm listening.
McFadden predicts that 2025 could be a pivotal year for the market,
Okay.
potentially marking a shift away from those mega-cap tech stocks that have dominated for so long. She sees a possible rotation towards small and mid-cap companies.
Wow. That would be a significant shift.
It would.
What's driving that prediction?
Yeah.
Why does she think this rotation might happen?
McFadden believes that inflation control will be a major factor.
Inflation control.
If inflation remains elevated
Okay.
and interest rates continue to rise,
Right.
investors might start to favor smaller, more agile companies
Right.
that are better positioned to adapt to a changing economic environment. They might also see these smaller companies as more innovative and disruptive,
Right.
offering growth opportunities beyond the established tech giants.
That's a compelling argument.
Yeah.
But isn't there still a strong allure to those big tech names?
Yeah.
I mean, they're seen as reliable, profitable, and deeply ingrained in our lives.
They are.
Will investors really be willing to shift away from them?
That's the big question, isn't it?
Yeah.
Will the allure of artificial intelligence, stable dividends, and familiar brands continue to outweigh the potential growth and agility of smaller companies?
Right.
Or are we on the cusp of a significant market shift
Okay.
where investors seek new avenues for growth and innovation? That's the puzzle everyone is trying to solve.
That's a great way to frame it.
Yeah.
It's not about choosing a side.
Right.
It's about understanding the forces at play and making informed decisions
Exactly.
based on your own goals and risk tolerance.
Absolutely.
So we've covered a lot of ground today.
We have.
From consumer spending to market trends to investment strategies.
Yep.
It's been a fascinating journey.
It has been.
I feel like I've learned a lot.
Me too. It's always exciting to delve into these topics and try to make sense of the ever-changing economic landscape.
Yeah, it really has been a deep dive.
For sure.
And it's left me with a lot to think about.
Yeah, me too.
That potential shift away from mega cap tech towards smaller companies, for instance.
Yeah.
Do you think that's a sure thing?
That's a good question.
Or are there factors that could keep those tech giants on top?
Well, it's definitely not a foregone conclusion.
Right.
Remember, those large-cap tech companies have a lot of advantages.
Like what?
Established brands, massive cash reserves, a proven track record of innovation.
Yeah.
Plus, they're heavily involved in artificial intelligence,
Right.
which many believe is the next big wave of technological advancement.
Right.
So it's entirely possible that they could continue to dominate,
Okay.
especially if they successfully leverage AI to create new products and services.
And what about those smaller companies, the ones that McFadden is so enthusiastic about?
Right.
What are some of the challenges they might face, even if the market does start to favor them more?
Well, they often struggle to compete with those deep-pocketed tech giants.
Okay.
Especially when it comes to things like research and development marketing and attracting top talent. Plus, smaller companies tend to be more vulnerable to economic downturns
Right.
and shifts in consumer spending.
Okay.
So even if they have great ideas and innovative products,
Yeah.
they might face an uphill battle
Yeah.
when it comes to execution and scaling their businesses.
So it sounds like there's a lot of uncertainty,
Definitely.
but also a lot of potential,
Absolutely.
both for those established giants and for the up-and-coming innovators.
Yeah, it's an exciting time.
It is. It's going to be fascinating to see how it all plays out.
For sure.
Is there anything else from McFadden's interview that really stood out to you?
Let me think.
Something that's worth highlighting for our listener?
You know, one thing that really resonated with me was her emphasis on the human element of investing.
The human element.
Yeah, it's easy to get caught up in charts, graph, and algorithms.
Right.
But ultimately, investing is about understanding people, how they behave, how they spend their money, and what drives their decisions.
That's a great point. It's about connecting the dots between those big economic trends
Exactly.
and the real-life experiences of consumers and investors.
It's not just about numbers. It's about people's lives.
Exactly. And that's why it's so important to stay informed,
Yes.
to keep learning, and to be adaptable.
Right.
The market is constantly evolving.
It is.
And the best investors are the ones who can adjust their strategies and embrace those changes.
Yeah. Well said.
Well said. And speaking of staying informed, this deep dive has given us plenty to think about and digest.
A lot to chew on.
I'm especially intrigued by that evolving nature of Black Friday deals.
Oh, yeah. That's an interesting one.
It makes you wonder if those massive shopping events are becoming less relevant in a world where consumers have so many options.
Right.
And deals are available year-round.
It's definitely something to keep an eye on.
Yeah.
It raises a lot of questions.
Like what?
How will retailers adapt their strategies? Will consumers change their shopping habits?
Yeah.
And what does it all mean for the broader economy?
Right.
It's a reminder that even something as seemingly simple as holiday shopping can be a window into bigger economic and societal trends.
Yeah, it's a reminder that there's always more to learn,
Always.
more to explore,
For sure.
and more to discover.
Definitely.
Well, thanks for guiding us through this deep dive.
It's been my pleasure.
As always, it's been an enlightening conversation.
Yeah, it's been a great discussion, and I hope it's given our listeners some valuable insights and food for thought.
I think it has.
Awesome. I see a member as 2004.